Hi, this is Mark with your analysis for the week commencing February the 13th. Just before we go into this week's analysis, I'd like to have a quick flick back through some of last week's. I had a lot of emails from people saying that it had a very good week, and I had my best week of the year so far, and a lot of it was done from last Sunday's analysis. And this, for example, was the Euro USD, and the black dotted line here represents the previous Friday. So what I said at this point here was that we would be looking to long at 35.20 should price come down there on the Monday, and it did it. Went a couple of pips past and continued up, and it went for 200 and odd pips. So one pair from one little bit of analysis on the Sunday would have made you well over a week's target. And this was simply done from support and resistance. There are EMAs in the area as well, which I can go into with you later, but a simplistic chart and a simplistic method for analysis. During the week, I think on the Monday, I said to you, look for a pullback to 83.20 here on the Aussie Dollar Yen. It came back down. What did it do? It stopped to the pip at the 83.50 that we'd been looking for. Once again, you had a profitable trade from analysis we've done in advance and for the reasons that we go through every week. This is the dollar yen, and I said last Sunday to look for a potential bounce back down 82.40, and again this went down 60-70 odd. Reiterated during the week how you can make Forex as simple or as complicated as you wish. I do use a lot of EMAs in my analysis, but on a simplistic level, this was the dollar yen, and I said we're looking to short here 82.40. And one of the prime reasons that this was just major previous support and resistance. Have a look at the chart. What is it that strikes you here that is important? How important this 200 EMA has been. On the previous Friday, it spiked it, touched it to the pip. The old hand in the fire theory. Burnt your fingers, it's moved off. Did it again Monday and did it again. Later in the week, did it again. So this is obviously a major important area on this dollar yen. You were able to short there, and there, and there. Finally, yes, you would have lost, but then what do you think in terms of, well, when price has broken through an area of previous support and resistance, then you're looking for a long. Price then goes the other way. Equally, we had the Euro GBP, and on the daily, we were looking for a short at 85.15. And I'd said that here on the Sunday, and it took all week to get up here, and I know some of you in the forum were in this trade, and it went on forever. But what did it do? It did move down. It pulled down eventually 90 odd pips. What had it done? We were looking for 85.15 because of previous support and resistance. We have this 200 EMA there just above it. Again, the fingers in the fire, it's moved back off it. There was further confirmation, and this is where I use extra indicators for confirmation, because I know some of you wait for 8,500. It took all week to get there. And then it gets there and you email me and say, well, I didn't take it because it seemed to be moving a bit quick. Well, further bit of confirmation, and I've shown you in recent weeks how important the fibs are with the euro pound. Now fibbed it going up, and what did it do? We had a fib in the area. Wow, that's a little bit more confirmation that price was going to go down. And if we go to the weekly chart, we have the 55 EMA just above the area. And if you notice here, you'll see how the 55 EMA was important in the past. Where does your stop go? Well, it goes the other side of that. That then takes you to 85.50, 85.55, you have your stop. We were looking for a potential move down all the way down here. So you were risking 50 odd pips for a potential gain down here of 250. Will it keep going? Well, let's look at this week's analysis. This is the euro pound with all my indicators, lines, everything all over the place. If you're new, don't let this phase you. My principles are based primarily on support and resistance and fibs. EMAs are merely a mobile form of support and resistance. Now, if you're not already in this euro pound, where would you look to take the trade? Well, the ideal place would be for a short would be a pullback back up here again to 85.15 for all the reasons I've just shown you. And if it does get back up here, then yes, I would short it again and at the stop the other side of the weekly EMA again. If it was to break this area, I would not be interested in a long until it was broken and closed above this weekly EMA. If it just keeps going further down, then we have a potential triangle breakout forming here. So the way to play it then would be a break and a close below 84.14, which is a previous area of support and resistance, with a view to a potential further short. Watch this Bollinger at market open. If it closes and points up, then it's likely that price will stop or certainly stall here, because it's 78.6 of the recent move. Combine that with a closed Bollinger Band which will be pointing steeply up, i.e. a never in a million years one, and it's highly likely it would bounce back up again there. This is the Euro USD on a weekly chart. Now you can see on a weekly here we have had 3 weeks of complete indecision on this pair. We're getting the movement and then we're ending up back where we started. And this area here, going back to the similar time of year last year, February 2010, we had a similar scenario where price meandered around here for many weeks and then price fell 1600 odd pips. So we could be on for a big move here. However, the difficulty is how do you play it, because there are a lot of monthly and weekly EMAs here, and it's a big psych area and it's a fib, so there's a load going on at 3500. The way I will play this is to go down to smaller time frames. The daily is not enough in itself because, well, once again, we have all these EMAs. We've now had a 5-8 cross suggesting price is going to go down here, but I'm going to go to a 4-hour. This is a 4-hour chart, and you've got 3500 in here, and you can see how price, the EMAs are starting to roll, beginning to start, stochastics are rolling up. We have MACD divergence suggesting price is going to go up. So until it breaks and closes below 3500, I am only interested to long. However, if it does break below 3500, I will leave this alone, and the reason is, go back to the daily, because of all these EMAs in the way, it could simply bounce back up at the monthly or the weekly here, and then you've got the daily. There's loads going on down here. I really don't like it when we're going into lots and lots of EMAs. So as I say, if it starts to break and go down, then I will personally leave it. However, the pound, this is the pound. Now, just to teasers, it closed just above 160. And once again, you look back over recent weeks, you can see how important this area has been. How would you play this? This goes down onto the daily chart. Once again, we've just had a 5-8 cross. We have MACD divergence suggesting this is going to fall. Once again, I would look on the 4-hour chart. But things to look for 4-hour charts for the move back up again. However, if it breaks and closes below 160, there's plenty of room below here for it to get all the way back down to the region of 158, 158.50. So if I was going to short either of those pairs, this is the one I will go for. So look at market open for clues here. There is a lot of news this week for both the pound and the euro, so it is likely to be volatile on different days. It's not more to be, for me, a weekly move, but the crucial area is 160. Either a bounce back up or a breakout pullback with a view to a short, possibly even on a 4-hour. Be wary on the euro and the pound. You could put a trend line in here now for both of them, and both of them have a very similar triangle setup and this lower highs, lower highs, lower highs. So it could be, even if we do get a bounce up, it will be a limited move. This is the Aussie dollar. Aussie dollar teases as well. It's closed above 1000, but it is just fractionally below my preferred area we were looking for the other day, last week, of 10020. Once more, we've had a 5-8 cross down, stochastics rolling over, etc. And bear in mind that the Aussie dollar and the euro are usually well correlated, so you need to be careful on how many trades you take at the moment. But for me, I find this a little bit too messy. If it breaks and closes above 10020, yes, I would look for a long, but then be mindful of this area here is likely to be very strong support and resistance. I think for me there are better opportunities elsewhere. This is the Aussie Dollar Yen. Now the Aussie Dollar Yen broke and closed above 83.50, which has been a major area of support and resistance in recent weeks. We have had price spike through and then come back every time, and I would really have liked it price to have closed above this 83.70 area, but the theory now is we're in an uptrend. We have broken a previous area of support and resistance, therefore we're looking for a pullback for a long. The ideal scenario again would be 83.16 once more, this monthly EMA, and it may well have moved up a bit tomorrow, so possibly 83.50, 83.30, 83.50 with a view to a long. The more adventurous amongst you may go for a long 83.50, but because of the Aussie dollar scenario, I would just wait. Be very, very careful anything Aussie dollar anyway, because just after market open there is major news. There's home loan news, and during the week we have big news. So once again, these are pairs that you may find one day they're up, one day the next. We need to watch the calendars and we will analyze accordingly during the week. This is the Euro Yen. Euro Yen on a monthly, I showed you how we've waited for months for this triangle to break. Price has now closed above this trend line. The previous month, 5-8 cross up. We had MACD divergence suggesting to us for many months that price was going to go up. Stochastic, everything suggests it's going up. And once again, we have this scenario for entry. Well, for entry, 112.25 area down here would be my preferred entry because it is a previous area of support and resistance. We have a trend line in place. We have a Fibonacci just below it. And again, this 111.80 was important before. So for me, I would be more interested to long from here with my stop just below here. However, of course, you may be a counter trend trader of a mind, well, 113.40 has been very important as we've seen. Those of you who feel that way, I don't. I prefer to go with the trend, but you could look to short here with your stop just the other side of the 200 EMA on the daily. Watch the Bollinger at market open. If it closes, it gives you more confidence that this is going to go down. This is the dollar yen on a weekly, and the dollar yen has now broken. So all the yen pairs appear to be breaking major trend lines. But you have to be careful because of the fact it could be something to do with the Bank of Japan intervening here. My best advice is only trade one yen trade at a time for the week ahead. This is the CAD. Said last week, look for a short at 1000, and I always talk in terms of areas, and I usually say 10 to 15 pips. Now I missed this. I had finished for the week anyway. It only got up to 99.85, so it was 15 pips away. And say I would have missed it anyway because the spread would have avoided it. I know some of you in the forum caught this, and it's 100 and odd pips in profit. This again is one of those I would be interested. If it gets back up here, this time 99.70 area, previous support and resistance, I would definitely look to short with my stop the other side of the 50% fib. Counter trend traders once more will be interested to long here. However, the more times the price hits this area, the more likely it is going to go through. And once again, counter trend trade is not for me. If you do trade counter trend, then I always recommend you half your stake and move your stop to entry very quickly. Often you can get what's called a dead cat bounce. It will bounce down 20-30 pips up and then go through. So be wary. Final thing I wanted to show you is silver. One of you emailed me the other day and said, is this a head and shoulders pattern? We've just had one on gold chart on the daily. And yes, it does look so. Here we have the head, the left shoulder, and now the right shoulder in place. And the theory of this, as you should know by now, is that the distance between the head and the neckline, approximately 450 pips, should be reflected in a move from here. Now that would take silver back down to $22 an ounce. Therefore, how would you play it? Well, for a head and shoulders pattern, you wait for the neckline to break. However, were you trading this simply from trying to catch the top of the shoulder, you would have had your stop here with a view to a move down here. So you're risking 100 odd pips here for a potential 300 odd pip gain just down to the neckline, and then possibly 400 below it as well. I didn't used to trade gold or silver on Forex, but I have been playing with this recently, and I did actually short this the other day. So we're in them, fingers crossed. We've got stochastics beginning to roll over. Let's wait and see what happens. But areas of interest are obviously double tops back up here, and then on the way back down we've got the 28 round number with the EMA not far away, and so we have this support and resistance, this neckline. So a very interesting setup. Let's see what happens. Well, and somebody was asking as well whether it's a good idea to use Forex to buy gold and silver. I will write an article about this. It's a bit more complicated, but I know one way that you can use it. If you'd bought physical silver, and let's say you bought it at $30 an ounce, then what you could do is, if you see price start to tumble, you could short it via Forex. You get the leverage, and in effect you then are hedging your silver or gold purchase. So that is the way I would be most inclined to use it, would be for hedging if you hold the physical metal. But say in the coming weeks I'm doing a few articles on gold, and I will let you have some more as we go along. Okay, have a great day tomorrow. I'll catch you again Monday evening.